Hello, I'm Debbie Bell-Hosking for FinextraTV here at Sibos 2022 in Amsterdam. I've just been attending a round table on CBDC with the two gentlemen seated with me, and actually was very well attended and a heated debate. So may I first of all say hello to Alistair Brown from EPAM.
Hi, great to be here.
Good to see you again. And Rhomaios from Fnality. Hello.
Hi there, Debbie. Thanks for having me.
Well, it's an absolute pleasure. Of course, we were together only moments ago, were we not?
Yes.
Round the table, discussing CBDC. I'm going to throw this one to both of you. It was really hard to get a consensus or even an agreement of what a CBDC is. If I go to you first, perhaps.
So, absolutely. Central banking digital currencies came about, I think, because Libra was introduced into the world by Facebook. It was an attempt to take control of digital money, and I think there was a counter reaction to that on the part of the central banks and the banking community generally. They didn't want big tech to take this over. What happens next remains extremely vague and unclear because there are so many different interpretations. Even the phrase CBDC is open to debate as to what it is in the first place. But there's no doubt that there's a subdivision here between a wholesale version and a retail version. And my personal view is that correspondent banking in the old model is up for grabs. It's on its last legs or towards the end of its shelf life. And central banking digital currencies may be a solution to that, insofar as there are deep systemic inefficiencies within current correspondent banking, and CBDCs make the whole thing much slicker, much cheaper overall, and much more likely to be accurate. But even there, a big debate to be discussed. And what we've just had around the round table was 15 different points of view on this stuff. So very interesting, entirely inconclusive, frankly.
Well, it was inclusive. However, and I did say I was going to throw this question to you. We were saying that this is a debate that needs to happen and will be continuing to happen. Just, Rhomaios, just what was your feeling about the fact that there was no resolution?
Yeah, well, for me, there were two camps in sort of three parts. So in the wholesale part of CBDC, the two camps were one part kind of thinking it was inevitable that some form of CBDC, whether it was delivered by the public sector or delivered by the private sector, was going to happen. And the question was really around how were the institutions at the table going to adopt it in some way. And there was another camp that was saying, well, do we even need this? And actually, you need more research, and it's not proven that you need that. Need CBDCs yet, at least to us. Somebody needs to show me why I kind of need it. And it sort of relates to the conversation about Libra, just because Libra had a specific use case that it was going after, and CBDCs have come as a reaction to it, as opposed to necessarily a thing that's positive for their own reason. In the retail space, there was a slightly different debate, but again, sort of two camps. One camp was maybe it's a good idea, and you need to have monetary inclusion, etc., etc. There's a whole host of reasons why you might want it. But there was another very interesting camp that was saying actually the thing that the central banks or the authorities should be solving for is around digital identity, and actually that was much more important at the retail level. And then the third thing was kind of tying both ends of that spectrum together, which was there were some people that thought that it was very distinct between wholesale and retail, and there were others that thought actually it could all be done on the same platform and somehow be unified. So basically, everywhere you look, there was a kind of disagreement about the direction that we were going in.
Yes, lots of different opinions.
Yeah.
Some people did say yes, we should have the identity wallet. Other people were saying it's got to be simple. Keep it simple. What are your thoughts on that?
Simplicity, obviously entirely desirable. The issue here is each central bank will behave differently. How does each one regulate its own financial services culture? And these things are radically different. If you look at autocratic countries that will want to control the entire process, that's one thing. And then there are other countries, the UK being a good example, where the controlling authority, we want to put enough control in there to give it a framework, but also little enough regulation to enable innovation. That's our financial services culture. the Chinese will not agree with the British on this, and there are many points between those two across the entire spectrum, and that threatens interoperability, because if these things don't intercommunicate in any meaningful way, then the game is lost in many ways. So this is deeply problematic.
And do you think, in the scenario of a CBDC, do you think the central banks would end up going to the banks for structure assistance? That was a point that was brought up.
Yeah, I think there's different philosophies at different central banks, and it sort of depends on the political philosophy in that jurisdiction. So, you know, the further west you go, it's much more about the private sector, and the more east you go, kind of less so. I actually just want to pick up on the simplicity point as well. There was kind of a debate about what is meant by simplicity. So one aspect of the simplicity thing is, well, we already do payments, and when you look at CBDC, it's no less or more complicated than what we already have. And there were other people that thought, well, from the moment of starting a payment, or initiating a payment, to the end, yes, they're kind of the same. But actually, when you look at the end-to-end process from a client perspective, they're actually radically different. And some sort of digital payment could be much simpler from on an end-to-end perspective.
And I'm also now thinking on those lines of something you said, Alistair, about transparency that I found interesting. Can you have too much transparency or too little?
There's this wonderful word, pseudonymity, which we've all discovered as we've tried to understand the relationship between complete anonymity, which in many ways is desirable, all the way through to total transparency about all of the detail of an individual transaction. Okay, there's a kind of midpoint where there's enough information about who's who in that particular transaction zoo, if you like. The reason this is important is because fraud is a huge issue already, and what we mustn't do is put in play another payment process of any sort that encourages even more fraud, and that there's a genuine risk that will happen. So if we get this right, we diminish the risk, because the ownership of digital money is central bank, is much more reliable and much more known. But if there's too much openness, too much data is shared, then the fraudsters will have an absolute field day. So this is again problematic, and the word pseudonymity suggests a kind of compromise, a kind of midpoint between those two extremes.
And Rhomaios, another thing that came up in the meeting was, do we need a CBDC?
Yeah, I mean, this is the semantic point that was kind of the heart of the debate.
Absolutely.
So what do people mean by CBDC? And actually, somebody was kind of saying that the CBDC part of it is really about the settlement asset, which needs to have the credit quality of central bank money, and that can be produced by the central bank or somehow manufactured in some other way. And then there's kind of a separate point about what's the delivery mechanism, which could also be the central bank, but could also be private. So there was many mixes of all of those options that people were debating.
Absolutely, and that's the word, debate. It's definitely an ongoing debate. Alistair, how would you like to sum up the roundtable from your point of view? And then I'll go to you, Rhomaios.
So this is sublimely inconclusive and frankly frustrating as a result. Fine. This show will run now for 2 or 3 years at least, until we get to at least some conclusion. I think what will happen is that one or two of the more forthright central banks will put a line in the sand and state what they think they can do here, and there'll be a framework around that, and everybody else will be looking at it as a straw man, which they will then criticise, differ from, optimise, and so on. And that's the way these things work, and that's fine. We're not even halfway through this piece of evolution. I think there's some very interesting opportunities that come from it. There are some genuine business cases that will improve the existing set of models in play. But we've got a while to go yet, and I think that even the vocabulary describing it needs to be reviewed and refined so that we have a better sense of our future here.
Because at the moment there are a lot of question marks. And Rhomaios, what's your take if I may ask?
Yeah, I basically agree. It was kind of an inclusive discussion, but it's sort of understandably so, because I think the CBDC conversation in all the different dimensions, wholesale, retail, developed markets, less developed markets, is going to take some time to play out. And the conversation really reflected that diversity of opinion and all of the information that needs to go into it. So actually I found it quite enjoyable, and people had really good things to say. So yeah,
it was good to hear the different opinions. On that note, may I say it's been great hearing your opinions too, both of you, and thank you for joining us.
Thank you.